Good afternoon, everybody. I have a 170 call chart right here. It had a really great breakout, and it did up here, and it's inflated. It's on a 4-hour candle, and this is referred to as a call chart. So, as they were marking up this side of the market with Salesforce breakout up here on that particular 170 call, which at the time was out of the money. Salesforce had an upgrade today, and we went rip it. Now, if you look at in the money on Salesforce, which I'm going to show you, last print was 170.43. This is a 175 put option, 4-hour candle. This value was up here at 14 and a half. Now they've marked it all the way down here, which is wholesale. This is the other side of the markdown of that particular strike price. So we know that once we're down here in this area, it's all the premium has been taken out of it intraday, and it has. So we know that we can make the market at lower prices, and because of that entry, then we can sell it back to the public. That's why we're a market maker, and our market maker management system tools allows you to do just that. And it's time to take action. That's the put side of the market. This is the call side. This side broke out really nice, really great, but it's inflated, and it will come down in price, and it will. And the bottom side over here, when we make our market, we didn't say anything about this price here, but we do know that we are getting that markdown, and we do know that as Salesforce heads higher, then we're going to still get a markdown hopefully over here, and we get that entry I'm talking about. And then we will sell it back to the public at the higher price levels, and we will, because we buy it wholesale. It's all about the entry. 99% of the people don't know what to do with the entry on this side, and the markdown on this side of the market as it goes up toward that 175 area, and how that 170 call is just continuing to break out, but the price is inflated and it will come down, and they always do. And 99% of the people try to keep holding them and holding them, and they don't know when to sell. They do not know when to sell. So we're covering the 170 call, and we're covering the 175 put option on CRM that had great breakouts today. And the last print on the CRM closing bell, like I said, that closing bell print once again was 173.45 plus 7.28 or 4.38%. You could call it that. Um, so with that breakout, you got the big markdown over here now. And the lower the dollar term is, then your capital risk entry is extremely lower than anybody else out there. Yeah, as far as making a market and whatnot. And we start making these markets at wholesale prices based on the actual movement in the equity price using our systems that we have. And we built them and we have them, and it prices the options, and it does. So we'll talk about that later. Right now, we're talking about directional movement on the 170 call, which was a great trade, and buying 50 contracts at $5 and selling them back up here at $10 and some change is the right thing to do. And that's how you make that kind of money with this. We know what we're doing, and we're here to show you that this is the only way to go. And we own the market maker system. We own our the bid, the ask, and where prices should go. 99% of the people don't know how to do that, and they won't know how to do that. because these people in these option kits and all these different exchanges are out to steal your money, and they walk away with it. Why do you think 85% of options go worthless on Friday? Probably because people didn't sell them. Rule one. Rule two is, but above all, the market maker stole all the premium from the public, and our systems will not let that happen to you. And you need to take action. You need to change. The year now is 2020, and markets and volatility and everything else is going to come back. And you have to be prepared for it. And you have to know that volatility is going to work both ways. And one is wholesale here, where my pointer is on the 170 call. When CRM got the upgrade by the analyst today and it underperformed all year, it got a pop and it's inflated. You have to know when to sell into it. The 175, well, over here, when CRM goes up another $1.50 or $1.60 or whatever, we hope it does, then we're going to do our thing at that point in time. As markets continue to get volatile, when people don't sell the calls up here, once again, they get killed. Now, CRM is a great trade and a great stock, but we're making market and options. So as we move forward, we're going to learn that we get to buy way down here to get that $175 put protection. And we're looking at where that wholesale bid would drop compared to where the retail prices were as the public rode this down. And they did. You can just tell by the volume.